Good afternoon, traders, and welcome to the Hot Stocks Outlook for February 2nd, 2017. Just a really great month of January, some really great opportunities. And, as always, and especially this week, it's a really great time to look at these markets, really review what we've looked at over the past few weeks so you can really understand why it's so important to have a tool that's able to account for those global intermarket relationships. Because, if you look at the broader S&P 500, we've had a lot of sideways action, not a lot happening. But that doesn't mean that there's not opportunity out there to really be making a tremendous amount of money when you really have the right tools and know where to look. So I'm going to use this example here of Apple, a stock we looked at, over the past few weeks. But here in the VantagePoint Intermarket analysis software, very important to understand, what's going on under the hood here with these indicators. Now, VantagePoint is able to account for, how the gold market, crude oil prices, the dollar index, the S&P 500, ETFs, other related stocks, how they all can affect, influence, and drive the markets that you're trading. So for instance here, let's say, you're trading Apple stock. What we see here is really the daily bars and candles for what's occurred in Apple stock each and every day. So these green bars being up days, these little red bars being down days, and really summarizes each, daily price action essentially there. Now, against that price data though, you see going back all the way to really the beginning of December, but against that price action, you see that there's a black line there and there's also a blue line. Now, to focus on this black line first, now this indicator here, guys, it's a simple moving average. Most traders are familiar with that concept, even people who are really new to the markets. One of the most popular indicators that traders are using is simple moving averages. And they're all great to really summarize what's already occurred in the market, but the problem is that they only look at really one market in isolation. All those close prices that go into the calculation are really just based on what's occurred in really only Apple stock. So, let's say you have a 10-day moving average, you'd simply take the last 10 days of price action, add that all together, and then divide by 10, that would create a 10-day simple moving average. And you can do it with a 5-day, a 15, 20, 50, 200. It really goes on forever. Now, what VantagePoint does, though, is it doesn't just rely on a simple moving average. That really just summarizes what's already occurred in a given market. But if we focus on this blue line here, it's very important to understand how this works. Now, that blue line on the chart, that is VantagePoint's proprietary predicted moving average. And it's not generated by simply looking at the past prices of Apple over a given period of time. What it's able to do is account for, hey, what's going on in the dollar index? What's going on in the gold market? What's going on in the technology ETF or, other related tech stocks or competing companies? And actually the technology here is able to identify a lot of those subtle relationships that traders just simply wouldn't have the time to do this type of analysis every evening to produce these extremely accurate results. So what we're looking at essentially between these two values, that black line and the blue line, is a comparison. It's a comparison between that summary of what the market's already done and a prediction of where markets are expected to go, again, based off of those global market relationships, because the reality is we live in a global marketplace. And if you're trading, in this case, we'll look at Exxon Mobil, if you're trading silver and gold mining companies, you really need to understand and account for how those commodity markets and ETF markets and all that is affecting, where you're putting your hard-earned money and cash. So what traders are able to do is, simply identify, opportunities where there's a crossover between these two values, essentially the predicted value and the actual value, that summary. And so when we see these crossovers, we understand that, hey, there's an opportunity. There's been a trend shift in the market. And, that came through all the way back at the beginning of December in Apple shares. Now, aside from the predicted moving average and the actual moving average, if we look at the bottom of the screen here, what we're going to see is what's called the predicted neural index. And this is another indicator that, again, is looking at those global market relationships. And what it's able to do is look forward 2 trading days ahead and really let you know whether the short-term trend, if there's going to be strength or weakness over the next 2 candles, the next 48 hours, which again really helps traders to get confirmation of these trend reversals, and more importantly, know what to expect over a given period of time. That's really what trading's all about, is understanding, hey, is there going to be strength in the weakness? Should I be a buyer or a seller? And how should I adapt myself to really, account for how the markets are constantly adapting and changing and moving forward through time here. So here we have this blue line cross over the black line, and your neural index, that 48-hour prediction, strongly up at a 1, saying, look, now's the time to go ahead and get involved in Apple shares. And what's great about this is when you understand how to identify these trends, you can really position yourself, hold tight, stay patient, and make sure that you're in the market for these sorts of opportunities where the market gaps up from 121 to 129, but you came in and were buying down at 112. So, whether you trade options, whether you are a shorter term trader, longer term, it really doesn't matter. You're going to have the tools to really identify where are the probabilities so I can make sure I'm involved in this 16% move higher in Apple and don't really miss the best part of that move. So, Apple, we spoke about last week. Not terribly surprising that you're seeing a big move higher, especially when we start moving forward at, Wabash National Corporation, which I have talked for weeks and weeks and weeks about this stock because what traders are able to do is identify, when that trend reverses, when that blue line crosses below the black line, to take those profits, put them in your pocket, move on to something else. But in this opportunity here, what we noticed is, there was a crossover all the way back at the beginning of November saying the trend is reverse. It's time to go ahead and take, long positions in this market. Again, if you trade options, whatever, that's really where that reversal happened. We see your neural index really confirming that move over these 48-hour periods, really helping traders identify, what to expect moving forward. But here we have Wabash, just like Apple, moving excessively higher in yesterday's action. And now we're up 79% on Wabash National Corporation. And the thing is that the blue line never crosses below the black line. It's still telling you the trend is up, saying, look, hold tight in that position. And this is so important for traders. I mean, how many times do you get out of a position too early and watch it just accelerate higher because you really don't have that clear indication of, has this trend reversed? Should I stay in this position and really make sure I get the best of each one of these opportunities? Now, we talked a few weeks ago as well about what's going on in the gold market and these gold and silver mining stocks. We looked at Pan American Silver, Silver Standard Resources, all of those moving much, much higher. But that's the whole thing, is we identify these really big sector rotations in the market. And it's a great time to, go ahead and, focus on that given sector of stocks or group of stocks. So we look here at Goldcorp. Here we have a blue line over black line all the way back here, all these stocks really at the mid and late December, showing these crossovers to the upside, saying now's the time to go ahead and take some positions on these gold mining stocks. And sure enough, Goldcorp moving up, moving higher when a lot of stocks are really struggling and not really doing all that well, but a 25% move higher, $3 per share on a very, very cheap stock here. We're looking at a $13 stock. And again, you see the separation, between that blue and the black line, indicating that, look, the trend is still up. Ride that trend until otherwise noted from the software. And so, when you're making your decisions really based on the probabilities, and those high probabilities are also linked to, how the market really works. These things are very connected because of the global marketplace. And we really see it happening all over in these, different stocks and companies. And it's really important that you trade them the right way, because without accounting for those relationships, you can really get caught on the wrong side of some, bad situations here. But 25% move higher, Wabash 70% move higher, Apple almost 20% move higher. But that's not the entire story. We know everything's not moving up. We know that there's, the S&P's been struggling over the past few weeks. But look at Exxon Mobil here. So, very big company. A lot of people, trade this market, whether through the options or through the shares. But for the past, month and a half here, all the way going back to mid-December of last year, saying this trend reversed. This is not the time to buy into Exxon Mobil and many of these other oil company shares. You see that blue line below the black line, market went sideways for a while. So, looks very innocuous. Doesn't look like much is really happening there. But the reversal, happened way back here in the middle of December here. So you want to go ahead and make sure you can, really get short, hedge your long positions in the market with short positions. And regardless of, the volatility that picks up in the marketplace, you're going to be making money on those longs, on those shorts. We see here about an 8% move to the downside so far, but it looks like a lot of weakness in some of these shares. Again, in the retail sector with, Kohl's and Chico's, a lot of these small retailers really getting hammered over the past few weeks. And so it really helps you identify, hey, what sectors do I want to be short? Where do I want to be long? And really making money on both sides of the market here. So about an 8% move there in very popular Exxon Mobil. Another opportunity here, Western Union. More recently, crossover to the downside, very, very clear here. You see that neural index down at a 0 saying, look, make sure that you're short over these, subsequent 48-hour periods if you're trading Western Union. Certainly no good reason to go ahead and be long based off the output from the software here. And, so far we're down about, 12.5% over just 15 trading days. So, these are just a few examples, and I definitely encourage you to go back and watch those previous videos, and you'll hear me really sounding like a broken record here of really understanding that, look, you can identify these trends, take positions in them, but it's so critically important for traders to have a position on before all that volatility comes into the market, because, there's just no way you're going to be able to, take advantage of this really nice gap here in Apple unless you understand that the trend is up, has reversed, and you really have license to be taking positions, over this entire period, over the past month and a half or so. So, as always, guys, thank you all for watching. Best of luck out there in the markets. It's been a great year thus far. As always, this has been the Hot Stocks Outlook for February 2nd, 2017. Thanks again. Bye for now.